Good afternoon, people. It is Thursday, June 20th, 12:45 p.m. People, yesterday, I think, was the beginning of the end. Okay, the day that will live in infamy. And I mean that, okay? Because yesterday, the banksters admitted to themselves, I think, and to the rest of the world, that they have no plan. I always go back to that movie, The Big Short. Great movie. And at the very beginning of the movie, I don't know if you've seen it, but the very first thing they show is a black background with white letters, and it says Plan B. Just says Plan B, all right? So I think Jerome Powell and the rest of his comrades right now are like scratching their heads. Hey, we need a plan B. I don't even think they ever had a plan A, to be quite honest, okay? Ben Bernanke, the scholar of the Great Depression, the architect of this mess, okay, who started this whole thing with his brilliant idea that we could just, pump up acid bubbles and everybody will think, they called it the wealth effect, okay? I mean, this was his brilliant plan, okay? So he got out of Dodge, the hero that saved the economy, man of the year. Now he's off writing books somewhere, okay? And then you have Comrade Yellen, okay, who kept the punch bowl flowing, all right? And now you got Powell. Powell is like, he's the one who's going to get, he's the scapegoat. The party was great, shut off the lights on the way out, basically. So now Powell's the one who's going to have to try to clean up this mess. And he has no intention of cleaning up this mess. He just wants to keep the bubble going. So yesterday they finally admitted we never had a plan A, we don't have a plan B, okay? And we don't know what we're doing. We've lost control of the steering wheel right now. It was so obvious, okay? And then it goes on in that movie, The Big Short. It says, it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. And these Fed heads, they think they know for sure, okay? And it just ain't so. Oh, yeah, it's going to be like watching paint dry. It's going to be like watching grass grow. We're going to be able to unload our balance sheet, and we're going to have rates on autopilot, and we're going to be able to raise. What, are you kidding me? He got hit in the face yesterday with a good dose of reality. Just what a mess and calamity this economy is in. If he didn't know it, he found out, that's for sure. So he had his head up his proverbial butt, not for nothing. All right? So they're boxed in. It's over. What were they looking at? I don't know. They want to see more, right? We want to see more now. What's going to change between now and July 31st? 5 weeks. It's only going to get worse, okay? They want to see more. We want to look. Then, remember in The Big Short, it goes on to say, right? While the world was having a big old party, all right? And that's what this has been. Let's call it what it is. This was a big old party to just inflate stocks and real estate and keep interest rates low. That was their scheme, okay? And while everybody was partying, right, nobody was looking, right? It goes on, it says, there were a few outsiders and weirdos, right? They saw it coming. They did what nobody else wanted to do. They looked, right? So this is going to be one, people, we're going to have to buckle up. I'm serious. We're going to have to buckle up. I said once before, these are the culprits. We need to get a good look at these people because these are the culprits right here. All of them. They're all guilty, okay? Every single one of them. Whether they are still at the Fed, whether they're retired, but like I say, they never go away. They never really go away, all right? I also said I was going to show you these international culprits as well and banksters. Take a good look at these faces because they're all guilty as far as I'm concerned. They're all guilty of perpetrating one of the greatest sins in human history. And I mean that. I really mean that. But you know what? We can't really, the blame doesn't go entirely on them. Okay? Who orchestrated this Federal Reserve, this central banking? Who started it? 1913, we all know. But this is the man. This is Woodrow Wilson. Take a good look at that face. Because he's the one who allowed it. He's the one who was behind it. He's the one who pushed for it. That's the man right there. And not only him, but the Congress. All right? The Federal Reserve Act was passed by the 63rd United States Congress. I'm not going to name names here. The 63rd United States Congress, and signed into law by President Woodrow Wilson on December 23rd, 1913. The law created the Federal Reserve System, the central banking system of the United States, right? I'm not going to read the whole thing, but this is what started it all right? These central banksters. Now, there's a few more things I got in my stack here. I don't know if I'm going to get to it all, but what was the after yesterday's decision not to cut, and then the subsequent statement that he read and the press conference? What's the the offshoot of this? The July probability now of a quarter point rate cut is 62.6%. July, 62.6% probability a quarter point rate cut. There's a 37.4% probability of a half a cut in July, right? So there's a little over a third of a chance we'll get even a half a point. But basically, there's a 100% chance that they will cut in July. That's booked in. That's a given. Okay, they capitulated yesterday, all right, and they're going to cut in July at least a quarter of a point. That's 100%, all right? That's the July right there. Okay, July. Probability of a Fed rate cut. September gets very interesting, all right? The probability, there's no chance of staying pat anymore. And forget about rate hikes. I don't think we'll ever see another rate hike in our lifetimes, quite frankly. There's a 13.3% chance of a quarter point cut. This is September. A 56.6% chance of a half a cut. Better than 50-50. By September, they'll have cut at least a half a point. And there's even a 30.22% chance of three-quarter cut. So there's 100%. The cuts are coming. It's just a matter of how much. Are we going to get a half a point? Are we going to get three-quarters of a point? We might even get a full point. Now, I go out to October. There's only a 7% chance of a quarter cut, because by October, that's it. Katie barred the door. 37% of a half a cut. 42% three-quarters of a cut. And 13% one full point cut by October. Okay? They're going to zero, people. It's just a matter of time. They're going to zero. Okay? This is the October probabilities of rate cuts. Okay? So that's a 79% chance that we're going to, by October, we got between a half and three-quarter cut. All right? And there's even an outside chance of a full point by October. Okay? Who are they kidding, these people? They're boxed in. They want to keep the juice flowing. They have no choice. All right? But they're going to zero. Now, I saw this other article. I think it was pretty interesting. You know, when Trump first got elected, there were a lot of gold people. It's like, he's a hard money guy. Yeah. He's a hard money guy. Gold's going to do great. He couldn't be. What, are you kidding me? Now, he seems to want to elect people that are supposedly hard money guys, right? He wanted to get Herman Cain a job. He wanted to get Stephen Moore a job. And that's Stephen Moore. He made a complete buffoon out of himself yesterday. This guy, Stephen Moore. And then there's this other name that keeps getting floated around. Judy Shelton, who's supposedly this big gold advocate, right? She wants to go back to a gold standard. One of President Donald Trump's possible picks for the open seats on the Federal Reserve Board said in an interview that, if appointed, she would want to see interest rates all the way down to 0% in 1 or 2 years. Judy Shelton said she would lower rates as fast, as efficiently, as expeditiously as possible, according to a report from the Washington Post on Wednesday. Shelton was an economic advisor to Trump during his 2016 campaign, told the Post that she had spoken with the White House about a role on the Fed's board. Trump is currently looking to fill 2 vacant seats. Okay, she wants to go down to 0 as fast as possible. She's a hard money person? This is where it's going, people. 0% interest rates, negative interest rates, QE. I said yesterday, gold was smelling this out, you know. They tried to bang it down. They couldn't get it below that 1340. It held, okay? Now, we're not out of the woods, don't get me wrong, because they hate gold. These banksters hate gold, okay? And they're going to do everything they can to keep this gold under lid. You can count on that, okay? So it's going to be a battle every day. This is what these banksters want, okay? Now, I was watching CNBC yesterday, and this was another guy. I wish I didn't catch his last name. I turned it on. It was at the end of an interview. His first name was David. She mentioned David. I didn't catch the last name. He was from the Brookings Institute, okay? Brookings Institute. And he was praising the Fed, how, they're responsible, for the money supply, and they're doing a great job. And he made a comment like, we wouldn't want to have our money supply based on, a gold mine, they find some gold in South Africa next week. As if to say, gold is too volatile. Demand is so fluctuating all over the place that we can't use gold, as our money supply. That couldn't be further from the truth. This guy is a complete imbecile, okay? But he's another one that hates gold, okay? That's just what it is. The gold haters, okay? And I'm looking world gold production by year in mines from 2005 to 2018. And it's been on a steady increase. Okay, it's been on a steady increase. But look at that chart. Does that chart look like it's all over the board? Does that chart look like fiat money? Up, down, everywhere? Does that chart look like Bitcoin? 20,000 down to 3,000? Or does it look kind of steady for the most part? So what is this guy worried about to make a comment like that? Gold mining is a global business with operations on every continent except Antarctica, and gold is extracted from mines of widely varying types and scale. Mines and gold mining operations have become increasingly geographically diverse, far removed from the concentrated supply of 4 decades or so when the vast majority of the world's gold came from South Africa. See, he doesn't even want to do the research, this guy. And he's at the Brookings Institute. China was the largest gold producer in the world in 2016, accounting for around 14% of total annual production. Okay, but no one region dominates, all right? It goes on to say, overall levels of mine production have grown significantly over the last decade, although substantial new discoveries are increasingly rare and production levels are increasingly constrained. What does this guy expect? One day he's going to wake up and there's going to be, 3,000 more metric tons that are discovered overnight? He's an imbecile. He's a gold hater, this guy, David from the Brookings Institute. Okay? But I told you that there's going to be a lot of hit pieces like this. There's going to be a lot of hit pieces like this. All right. This video is getting kind of long. I have a lot more. I didn't even get to Powell's statement or the press conference. Okay. But there was this other guy, Stephen Moore. You know, he was on CNBC. He says he doesn't smell a whiff of inflation. Not a whiff. Okay. And he's concerned about price. The only thing that he's concerned about is prices going down. What is wrong with paying less for something? Please explain it to me, Mr. Moore. Okay? He wanted a 1/4 point cut yesterday. He said the Fed messed up. They should have cut. If everything is so great, Mr. Moore, why do we need these emergency measures? Please explain that to me, Mr. Moore. He says he's looking at oil. It's too low. Soybeans are too low. Okay? Commodities are too low. Okay? I don't get it. But this is the mindset. Okay? He says that, so one guy asked him, he says, when President Obama was in, we were basically the same, right? Candidate Trump accused Yellen of being political and not raising rates. And he says, oh, he was wrong. You know, they didn't keep them too low. Okay? This guy, he didn't even have any coherent answer, this guy. He was just mumbling and laughing. Unbelievable. I don't even think I'm going to get to the transcript. Well, but there is one thing. I'm just going to read the opening paragraph because this makes me laugh. Powell came out there. He came out there like he was doing his duty. Okay? Good afternoon and welcome. My colleagues and I have one overarching goal: to sustain the economic expansion with a strong job market and stable prices for the benefit of the American people. Thank you, Mr. Powell. This is such garbage. This is such crap, okay? He's got one overarching goal: keep the stock market bubble going. That's it, all right? Not for the benefit of the American people, but for the benefit of the banksters and his ilk. That's it. Who is he kidding? If he had any integrity, he should resign. That's what he should do. He should call it for what it is, and he should resign. No, but instead he said, the law is on my side. Okay, Trump can't get rid of me, and I intend to serve out my full 4 years. Resign now, Mr. Powell. That's my advice to you. Anyway, that's about it, people. We have to watch this. I'm not saying we're out of the woods by any stretch of the imagination, okay? You got to sleep with one eye open when it comes to this gold market and this battle, because that's what it is. But it's going to get worse. There's no doubt in my mind. It's going to get worse. Yesterday was like, during the Civil War, that first shot that was fired on Fort Sumter, right? Right? That was just the first shot. That was just the volley. This thing is going to get a lot worse. You can bet on it. Anyway, that's about it. If you can get out, take a good walk. Nice day out there where I am anyway. So enjoy, and hopefully we pick this up tomorrow. Ciao.